Good morning. Welcome to Stock Market Today. It's Thursday, October 8th, 2020. This is your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to ChaikinAnalytics.com/today. Sign up for a free email where I get a lot of the content for this show. We also give you daily stock ideas to consider, and that hits your inbox every trading day before the market opens. So diving right in, U.S. equities were higher in Wednesday's trading, closing near their best levels. Gains more than offset Tuesday's weakness. Materials, consumer discretionary, and industrials led the market. Defensives, energy, and comm services underperformed. Treasuries were mostly weaker with the curve steepening again. The dollar was stronger against the yen, but lower on the euro cross. Gold finished down 90 basis points. WTI crude was down 1.8% after rallying about 10% over the Monday-Tuesday time frame. So as we get to the desk this morning, futures are following through a bit, up 40 basis points, and European markets are higher after a mostly bullish session in Asia overnight. Bear in mind, China remains closed for the Golden Week holiday. Treasuries are slightly stronger with the curve flattening after another steepener yesterday. Dollar is flat on the major crosses. Gold is up 30 bips. WTI crude is up 1.3% to kick us off on Thursday morning, where we take a look at the major averages, and SPY is pushing on the top of the range, right? That 340, 343 level that we've been talking about. Above 343 opens the door to the August highs as far as I'm concerned. That's just the playbook. That's the framework. That's what we're using. We've got a well-defined range in between. It's choppy. We break the range. We have to start thinking about a new trend developing, and that's how I'm framing it up for SPY. And then using SPY as a trigger, we want to identify the leading areas of the market and then drill down to the industry and stock level. QQQ, same story, 280. That level is important. I think if we can bust through there, same type situation where we have eyes for the August highs and potentially a continuation of outperformance on what has been arguably one of the strongest areas of the market for the past couple of years. What has not been one of the strongest areas of the market over the past couple of years is small caps, but they are getting in gear. Small caps close above 160. Should we hold that level, we open the door to the highs from earlier this year. Also, we're seeing encouraging relative strength. As a matter of fact, by our measure of relative strength, it's actually the strongest it's been in more than 12 months. So small caps getting in gear. We've talked about it a lot in our notes this week. Small caps seem to like the prospects of a Joe Biden presidency, as their strength has largely coincided with Vice President Biden's poll numbers. So something to keep in mind here going forward. Now, yesterday we looked at small cap growth. Today we're going to look at small cap value, which is a little bit less compelling. Not a little bit, a lot less compelling in my opinion. But we keep an open mind and we just kind of see what is, and we'll take a look at that a little bit later on in the show. Let's hit our market in a minute, right? So, well, the market in a minute is stocks bounce back as markets move to the beat of the tweet. That seems to be the way it's been for the past couple of days, right? A tweet that the president was positive for corona or COVID sends the market down. Rally as we get out of the hospital. Tweet about fiscal stimulus talks being called off until after the election. Stocks go down. Walk that tweet back. Stocks go up, right? We're marching to the beat of the tweet right now. Breath metrics improve and the advanced decline line actually made a new high, so that's compelling. And as we said, small caps are getting in gear. Today we're going to screen for small cap classic bulls. Futures point to a higher open today, as I said. Now let's dive into the power bars now. We got it right this time. Taking a look at the major indices, the Dow was up 1.8%, 4 to 6 though, bulls to bears, so still skewed in favor of the bears. S&P 500 up 1.7%, 125 to 73, bulls to bears on that metric. NASDAQ was an inline performer, 27 to 7, bulls to bears there. And small caps outperform and have a solid ratio, 726 to 245, bulls to bears. Bonds downtick, sending yields higher. Materials were your best performing sector yesterday. And as you know, for those of you who have been following along with me since the end of June, we've been bullish on materials. Materials up 2.58%, 11 to 4, bulls to bears on the power bar ratio there. So according to the Chaikin power bar, small cap stocks and large cap stocks are bullish. Major markets are mixed. So I said we would look at our screen, right? This is our dynamic that we do a couple times a week. Getting a ton of good feedback on this. People seem to like the screens as a way to kind of look for ideas. So today what I wanted to look at was, kind of given the strength that we've been talking about in the small cap spectrum, let's take a look at names that are bullish or very bullish, above their rising long-term trend line, 6-month high in money flow persistency, 6-month high in relative strength, trading above $5 and are part of the kind of small cap universe. That was the thought process behind running this screen today. All right, so if you're, if small caps continue to work higher, which names do we want to think about? So we've run that screen. It's our classic bull screen, and it returned 26 names. I would take EGO off the list as that rating has ticked a bit lower. But away from that, AAWW is, these are compelling names to look at. To think, if you're, not necessarily go grab them right now, right? You got to have to wait for the right setups. But if I was building a watch list of compelling names in the small cap landscape, this would be a great starting point. So, feel free to take a screenshot here or come back to this video where you can set up a list to look for some ideas. Some that kind of jump out at me. MHO is in the home builder space. Atlas is been a solid name that showed up on a lot of our screens. Sleep Number again is a play on the home builders. So as is Lumber Liquidators. But take a look at these names. Some interesting potential opportunities with the screen that we're running here, looking for classic bulls in the small cap landscape. Taking a look at our sector tracker now, moving to the last 5 days. Utilities remain at the top of the list, and this is one of the more intriguing dynamics to me. And what I'm trying to figure out is this a yield play? I.e., yields on treasuries are so low, starting to back up a little bit, and investors are rotating out of those treasuries and owning utilities as a bond proxy? Or is it the market signaling us that things might not be as bullish as we think? I don't know the answer, right? Only price in the market is going to tell us the answer to that question, but that's how I'm thinking about it right now. But it's just kind of interesting to see the utilities at the top of the list. Industrials, REITs, financials, and materials round out the rest of the leaders. Discretionary healthcare staples, middle of the road. Tech, energy, and comms, the bottom of the list with comms. Negative over the past 5 days. That group under some scrutiny now. With the House releasing that 449-page report looking at potential monopolistic type activities and powers on the part of some of these big comm services names. So, that is something to be mindful of, right? The information is out there. It probably makes sense to have it in the back of your mind as you're thinking about some of those big names in the comm services space. Taking a look now at the industry in focus, we're going to take a look at innovative tech services today. Now, I don't pick these. They're auto-generated, and then I analyze them for you in real time. But this has been a solid group over the past 6 months, outperforming the S&P by 42%. Power bar ratio, which looks at future potential, is strong, 9-6 bulls to bears. It's ranked number 13 of 21 subsectors, and it's moved up 1 slot over the past week. So if you're thinking about looking at some names within this group, Teradata, TDC, SS&C, SSNC, and Cohu, COHU, all have very bullish shake and power gauge ratings, and SS&C is probably one of the better business models out there. Just my 2 cents from knowing the company. But take a look at those names as for potential opportunities here. Again, not immediately, right? Just something like, hey, take a look at these. You should maybe think about them and doing more work on them. But let's take a look at the ETF. XITK has a bullish ETF power gauge rating, strong trend above that rising long-term trend line, and knocking on the door of new highs, right? So we're back at these August, September levels. August, really strong trend. Solid outperformance, and the intensity of that outperformance is picking up of late. Only real issue I have here is that it's just overbought in the near term, right? We've been talking about that for all week. How we entered the week with the kind of the key growth themes being overbought and kind of wanting to skew towards the cyclical themes that we like in materials and industrials. So those who have paid attention to that dynamic, I think that's worked out this week. So just the only real knock I have here is that it's overbought in the near term, right? So you might just get a better opportunity, or at the very least, this might just be a higher risk entry at this point. But certainly utilize the group to look for names that might be compelling as you're doing your work. Taking a look at what's trending now, our movers and shakers from yesterday. Alexion, some positive takes from their analyst day the previous day, send that stock higher by 8%. Freeport, FCX, higher with the materials, 7.4%. Invesco, nothing company specific, but remember we do have Trian in here. TPR, Tapestry, some positive comments out of Deutsche Bank today. I didn't see anything in yesterday's news to drive that stock higher. Same Gap. Actually caught an upgrade from Barclays. So Tapestry could just be going along for the ride as Barclays had an industry note speaking positively about the group. So perhaps Tapestry goes along for the ride, but Gap was upgraded there at Barclays yesterday. That sent that stock higher by 6%. The loser side of the board, nothing really company specific in any of these names that I can point to. You know, CBOE, the worst of it, down 2.3%. Rest of them, nothing really jumps out at me. I didn't see anything company specific on the news front to take these names lower. So we're not going to belabor it here. There's just really nothing to talk about. You see what they are. And it's not all that interesting from a news perspective. So let's dive in. What is interesting to me is the improving breadth in the market. So taking a look at the metrics that we generally look at, measuring trends across time frame and the health of those trends. Percentage of stocks above their 200-day moving average in the S&P 500, 69%. So we're back to a solid majority. I like to see it above 60 to signal a solid majority of stocks are in long-term uptrends, and we're back at that level, actually poking our head above this June high. So that is obviously compelling. Intermediate term, percentage of stocks above their 50-day moving average, also a healthy majority at 66%. So that is interesting. Not shown here, but shown in more detail in my note, or a couple of other breadth dynamics that look interesting to me. I look at the percentage of stocks that are on MACD buy signals. That number is over 80%. That's generally a good sign. Percentage of stocks above their 20-day moving average, solidly higher as well over the past couple of weeks. And most interesting to me at this point is the advanced decline line, which has broken to a new high. And, you know, in the past, the advanced decline line breaking to new highs has tended to precede the S&P 500 doing the same. Is it guaranteed to happen? Absolutely not, but it obviously tilts the odds, right? So think of your setup here. You have the advanced decline line breaking to new highs. You have breadth across time frames improving, and you have the S&P 500 knocking on the door of that 343 level, right? Or SPY rather, knocking on the door of that 343 level. So I think it's a pretty simple setup. If we get above 343, it makes sense to become more aggressive, knowing that you have breadth as a tailwind. And it seems to be participation is widening out, especially with strength in the small cap. So that's one of the more interesting developments that I'm looking at here today. Now, yesterday we looked at small cap growth, right? We showed a fund that was trading at a 52-week high. We showed a fund that was breaking out to new highs relative to the S&P 500. So I wanted to contrast that with small cap value. IWN, iShares Russell 2 value ETF, not even close to its highs from earlier this year. Right, still, it's knocking on the door of a breakout, similar to small caps broadly, but not there yet to the degree that the growth theme is. Now, RSI is trying to move higher, but check out IWN relative to SPY. Potentially bottoming, in fairness, right? We're not going to dump all over it. We're just going to be objective about it. But nowhere near a relative high, right? Contrast that now with IWO yesterday, trading at a relative high. Now, the bullish side of the coin here is that we're no longer going down, so potentially, a stabilization. And if we would look for signs with a breakout here to kind of become more constructive, but small caps are starting to get in gear. I think the play is still to the growth side of the equation. Across the market as well as within the small cap landscape. So just something to keep in mind there. And then finally, global equities, are they the next to move? This looks very much like small caps. We got them kind of bumping up against the resistance level, RSI middle of the range. What's interesting to me is that really since April, it's been an inline performer with SPY. So something to keep in mind. That'll wrap us for today. Take us for a test drive. I'm back with you tomorrow.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.